Morning, 9:41, May 17th. It's a Monday. Oh yes, oh yes. What's going on, traders, investors? Are you degenerates still in the market? Did you buy the dip? Yesterday's video I was talking about how, let's have a look. 42, this top here should form a support if you're gonna see it turn around. Looks like we tagged it 42,185. It's good to see. And this is on the 4 hour, this is on the bit stamp. And so, still a series of higher lows and lower lows. So, this high right here is 46,648 and 50 cents. Don't forget those cents. Yeah, pennies saved is $1 earned, right? but don't go picking up pennies in front of a freight train, right? Something like that. Anyway, 18-hour moving average. What does that relate to? 18 times 4, 36.72. Basically, I think that's 4 days worth, right? 24. 3 days worth. Oh my god, I have to get the calculator out. 72 hours divided by 4. Oops, not times of 4. 72 divided by 4. Wait a minute. Hold on. Let's work this out. I need to clear things up in my own mind before I can move on. I've got that kind of brain. Okay. 18 moving average times 4 hours equals 72 hours. Divided by 24 hours in a day. Yeah, 3 days there. I thought that was right. Okay, so yeah, actually a good moving average, right? A 3 day moving average, essentially. Haven't been able to close above it since May 12th. And what price was that? 57,000. And so, like, I'm not a big fan of indicators, but you kind of do need to have a reference point, right? I mean, I always had this 58,000 as a key level. Okay, look at this. Right, you got a low. Higher high here, above that. Higher low. Higher high. Higher low than that. So you basically take, if you want to do the higher low, you have to do it after a higher high, right? So this is how you create your trend. I wish there was an indicator that did this properly. Maybe does the zigzag do it properly? Let's have a look. Indicators. Zigzag. I don't think it does. Otherwise, yeah. See, I don't like it. It's not useful. So somebody needs to program a freaking trend, innit? So this is the next higher high, right? And this low is lower than this low. So now, okay, and a close below the 18 average, right? Trend change. How would you do the next lower high after this? It's not this, is it? It's not this. It's not that. Oh, that one, isn't it? Yeah. Yeah. Okay. So you don't need this. From this lower low, that's the next higher high. So get rid of that. This low is higher than that. So now the trend has shifted. It's neutral though, because it's underneath your moving average. If you're going to do it like this, again, this high is higher than that, but again, it's neutral. It would have kept you from going long, right? If you use a reference point. This is the first close above the 18 moving average, all right? But it didn't last long, did it? So this is kind of signaling to you now you're potentially looking for longs around here, but never got the chance. Again, close below the 18. Yeah, man. Okay, so currently, how are we doing? Again, lower low than this. This is a lower low than that. This is a lower high than that. So now we really need to start moving up, getting above what 46,600, and then closing above the 18, and then maybe tags 50, and then this would be the entry point if you're trading. It's still, if you're doing high leverage, sure you can scalp it, but the risk, you're taking on more risk. You don't need to play tops and bottoms. This is something that still, after all these years in the markets, you kind of it's hard to program your mind. You don't need to be a hero, right? You don't need to be a hero. Catching that move and then just walking away and being flat, that's all you kind of need to do. Maybe, you know, uh, right? You don't have to play the entire freaking thing. It's just too much exposure on leverage. It's too much exposure. I think that's something crypto traders are kind of finding out. You don't need to have your position exposed, your bank, your stack exposed all the time. 2-3 good trades a month. You got to grow your stack, right? So this is good. Positive divergence. Quite nicely. Look, price action is way more powerful than the actual momentum, right? Way more powerful. Let's go on the daily. Let's go on the daily. So it's going to take 2-3 days even to get up here. I think maybe Thursday, Friday. 1, 2, 3, 4. Yeah, and it's going to need strong oomph from the players. But question is, right? So we've got the G7 meeting coming up in UK. Actually, I think this is only first time in a long, long while. I think it's based down in Cornwall, and I just had a quick look on Yahoo Finance. I might have to dig deeper, but from what the blurb was saying, this is the most important G7 meeting since Bretton Woods Agreement. So, obviously, the Bretton Woods Agreement happened during World War II, was still going on in Asia, and it was during wartime. So, if you consider this past year and a half essentially economic warfare, it would make sense for a large meeting to occur where some stuff gets decided for next decade or two, right? The reason why, a potential reason why central banks are printing so much money is because of the existence of cryptocurrencies, is the existence of Bitcoin. So the existence of Bitcoin may be stimulating the fiat central banks to print as much as possible because they know maybe the days are up, the days are numbered, right? Getting mass adoption. 46 million Americans now own some sort of crypto, even if it's a little bit of dust. They're becoming a large voting force. Next election, I think I'm memed this joke before. Imagine Michael Saylor stepping forth as a candidate. running on a what? A blockchain party or something? I don't know. Freedom Party, Hope Party. I think he's got hope.com. There you go. Hope Party. Yeah, stranger things have happened. All right. I don't think he has the polished image, to carry it through, but maybe just provoking his ideas. Who knows? Who knows? It's long. Well, next election season. When does that start? Like 2 years time. Bitcoin's at 250, 250k. If Bitcoin's made plenty of millionaires, there's the funding. There's the funding right there. Okay. So here, I've pulled this chart up before. BTC USD versus M2. It's monthly. It's on Bitstamp. Okay. BTC versus Fed M2. Basically, money in circulation or money. There's M0, M1, M2. I think M2 includes like CDs, bank deposits. It's a broader measurement, I believe. I have to look it up. It's been a while since I've looked at the definitions. But as they print more money, assets go up. Right. This is kind of becoming a known phenomenon, right? I said the word correctly. Phenomenon. No, now I messed it up. Should have left it alone. Okay. So 27 peak. Peaked at 1.42 Bitcoin. Bottomed 0.22. Let's find out. Yeah, 0.22. Currently at 3.34. So I think this is just the arbitrary number, right? I think this is just, was it 46,000 divided by 20 trillion? No, is that correct? Million, billion, trillion. Okay, I've got a number of multiple zeros and 2 3. So somehow they've taken out those zeros. But yeah, we've got to come to the same number. That's good. That's good to know. How many bitcoins should it be worth against the $20 trillion? That's US money, not global money. How many trillions of fiat are there in the world? I don't know. It's more than 20, right? Maybe say it's 100. Say it's 100. Now we take that 46. No, you just take that 2.34 divided by 5. There you go. Make the math easy. So you've got a ratio of 0.468 against global money. Is that such a thing? Global money? I know this is not going to come up. Index. Global cash. Maybe it's IMF. No, it's not going to come up. I'm going to find it out. But I'm pretty sure $800 trillion worth of fiat is a good estimate. I believe the global property market is 250 trillion. It's huge. It's way bigger. There's more value locked up in property than there is actual money around. Okay, so what? How much money evaluation can a global monetary standard be worth? So here we go. I believe 50,000 was around 1 trillion cap. 1 trillion. Out of 100 trillion. That's 1%. What's a fair valuation? What's fair valuation in the market of Bitcoin against central bank money? Well, back here it was 0. It's still eating away, right? High 1. No, wave 1, wave 2, wave 3, wave 4, wave 5. So the obvious theory is that this is a grand supercycle wave 5 up, which means this phase, this is S-curve adoption phase, right? Should be longer and stronger than wave 3. And this lasted what? 2 years, essentially. 2.5 years tops, right? What if this lasts 3 years, 3.5 years? Where would you call the bottom? Say even this is the bottom. 3.5 years. 2022. Next summer. Okay. Here. Something around here. Where will Bitcoin be in basically a year's time? If this is wave 5. If this is wave 5. 1, 2. This is off the wave 5. 1, 2, 3, 4. A year-long up push. Ooh. I'm just giving you a general potential, right? I ain't saying this is gonna happen, but it could happen. So you gotta have some sort of general playbook, right, to play these markets. Not just looking at hourly candles. Not just looking at hourly candles, because you get lost in the weeds. You can't even see the forest because the mist is around you. But if you dial back, hop on the hill, look at the forest, then you can get a good view what is happening, right? So we shall see. We shall see. Let's have a quick perusal of the rest of the markets. Doggy coin back above 50 cents. Back above 50 cents. Sorry, this looks kind of messy, doesn't it? It doesn't. It looks very, very tradable. It looks easier to trade than Bitcoin, doesn't it? Very, very tradable. So, what is next? What is next? I think we hit $1. I think we hit $1, $1.16. I still believe 250s on the cards. Oh boy. Oh boy. Up here. Upper channel. I mean, it could happen real quick as well. That's the thing. Catch everyone off guard. Not everyone, because everyone's watching it now, right? But anyway. How's the ETH doing? ETH back above 3,500. How low did it dump? What was the dump like? 3 hours. Just to be different, 3 hours. Ooh, came that down to 3,100. Wow, this was really a big dump during the night. Litecoin 287 down to 263. Okay, my time is up.